Gold is approaching a major liquidity zone, and my primary focus today is a potential long setup targeting the 4115 liquidity pool. But there is one absolute condition that must happen first. We're not going to waste any time today with filler or generic market commentary. In today's explainer, you're going to see exactly how institutional order flow is dictating the market right now and how you can position yourself alongside it.
So where is smart money actually positioning today? Most retail traders are looking at the completely wrong level right now. The market is setting up a highly specific trap, and if you aren't reading the liquidity matrix correctly, you're going to be on the wrong side of this expansion. Let me show you exactly where institutions are truly targeting.
Here is today's executable trading plan. Our bias is a bullish pullback within a larger macro downtrend. The primary entry zone we are stalking sits precisely between 4078 and 4085. Our main target, that's the buy-side liquidity resting at 4115. But keep this in mind. This status is strictly pending confirmation. We need to see the institutional footprint before a single order is executed.
Let's break down why smart money is targeting this area, starting with the daily time frame. We have a completed bullish expansion into extreme premium pricing. Buyers are exhausted up here. This was followed by aggressive distribution, meaning the macro draw on liquidity is ultimately lower. Smart money has already taken the majority of the premium liquidity, and they're now engineering price to seek deeper sell-side liquidity below the recent structural lows.
But here's the problem, if you're just blindly shorting. Zooming into the 4-hour chart, price recently swept major sell-side liquidity at 39.70 and initiated a really sharp bullish displacement back into the internal range. This right here is an institutional pullback. The market structure shift to the upside is strong, which tells us that short-term algorithmic delivery is pointing higher to rebalance unmitigated fair value gaps before it resumes that macro downtrend.
Now this is where most traders get trapped. Retail sees a bullish 4-hour candle and they instantly buy the early breakout, or they try to find support at random historical levels. They're completely ignoring the fact that smart money needs to engineer liquidity before the true expansion toward 4115. Professional capital waits patiently for a London Judas swing. That's a deceptive move lower designed to trigger retail stop losses, sweep that liquidity, and deliver price right into a discount fair value gap for accumulation. To trigger these sweeps, the market relies on catalysts. Geopolitical events, like the paused US-Iran tensions dropping the DXY, certainly shift the macro narrative. But upcoming high-impact news like the German IFO business climate and US durable goods orders are not fundamental drivers today. They are purely liquidity engineering events. Institutions are going to use that volatility injection to violently sweep sell-side liquidity near 4070 to 4080 before expanding upward.
We can actually see these mechanics unfolding right now on the hourly chart. Price is currently rebalancing back toward equilibrium, testing local intraday discount arrays, and an unmitigated bullish order block around 4070. The bullish market structure shift was confirmed above 4080, and now price is pulling back to offer a deep discount entry. The draw on liquidity is unequivocally that Asian and London session highs resting at 4115. But looking at the current 15-minute price action, this setup is not actionable right now. Why? Because smart money confirmation hasn't appeared yet. Price is negotiating a local imbalance, but we haven't seen the algorithmic signature required to prove large institutions are actually defending this level. If you hit buy right now, you are simply guessing. This is where strict discipline comes in. Here is the exact execution model. 4 precise criteria must be met, likely during the London or New York kill zones. First, wait for price to retrace into our 4078 to 4085 discount array. Second, look for a clean 15-minute liquidity sweep of local lows. Third, confirm a 15-minute market structure shift with aggressive bullish displacement. And fourth, enter on the newly formed 15-minute fair value gap. That is how you trade alongside the algorithm. If our entry conditions are met, this becomes our exact execution plan. We are entering long in the 4788 to 4045 pocket. Stop loss is hard set at 4068, just below the order block invalidation level. We're taking our first partial profit at 4115 at the Asian high buy-side liquidity. Take profit 2 is 4135 to rebalance the 4-hour gap, and we leave a runner for the major 4-hour swing high at 4160. This setup yields a highly asymmetrical 1 to 3.5 risk-to-reward ratio. This is exactly the profile required for a professional capital allocation. You're risking 1 unit of capital to extract 3.5 units from the marketplace, meaning you only need to be right a fraction of the time to remain highly profitable. Factoring in order flow, time of day, and our liquidity pools, the execution confidence score for this long scenario is exceptionally high at 85%.
The narrative is clear and the market structure supports the expansion. But remember, this 85% probability only applies if our 15-minute confirmation triggers first.
Now, this is the scenario most traders are ignoring. The market is sending a warning signal. If we see a sustained hourly close below 40.50, the bullish institutional narrative is entirely destroyed. This level becomes critical because a close below 40.50 means smart money has abandoned the short-term retracement and is immediately resuming the macro daily downtrend.
Let's do a quick final recap of today's plan. Remain patient and wait for 15-minute displacement from the 40.78 to 40.85 zone. Target the 41.15 buy-side liquidity. Secure 50% partials at target 1 and move your stop to break even. Keep your risk strictly between 0.5% and 1% per trade, and most importantly, no 15-minute confirmation means absolutely no trade.
If you enjoy institutional-style market analysis using ICT and Smart Money Concepts, subscribe to ICT Market Theory. And if you'd like to trade alongside these specific setups, you can find the FXTM account link in the pinned comment below.
The market is preparing to move. The algorithm has its targets locked on external liquidity. The only question is, will you have the discipline to wait for the trap to close on someone else before you enter, or will you become the liquidity? Stay patient and let smart money tip their hand.